it away from you. I mean, you and the second thing, which I'll get a certain criticism for not living it, but I do tell those students, that if I gave you a car and it'd be the only car you get in the rest of your life, you take care of it like you can't believe. Any scratch, you'd fix that moment. You read the owner's manual, you keep a garage and do all these things. And you get exactly one mind and one body in this world. And you can't start taking care of it when you're 50. By that time, you'll have rusted out if you haven't done anything. So you you should you should really make sure that you just remember that you just got one mind and body to get through life with and to do the most with it.
What about life advice?
Well, life advice is, the most important thing, uh, aside from the things I've talked about already, is really who you associate with. You want to associate with people that are better than you are. I mean, basically, you'll go in the direction of the people that you associate with, and you want to have the right heroes. You want people. If you want to emulate somebody, you better pick very carefully who you want to emulate. And when obviously you can't pick your parents. They're going to have an enormous influence on you, but you don't get a choice on that. But you get choices as you go down the line, and uh, who you who you admire, who you want to copy, and the most important for most people in terms of that decision is their spouse. It's also important in terms of a partner in business, but the partner in life is the most important one. You want to pick a spouse that's better than you are, and then he or she, and you hope they don't figure it out too fast.
Great. Biggest mistakes people make when investing?
Well, they try to they just don't realize that all you have to do is just buy a cross section of America and then never listen to people like me or read the papers or do anything subsequently. They think that because you can trade, you should trade. You buy a farm, you buy an apartment house, you can't resell it tomorrow. And the cost of moving around, or now you get something handed to you, liquidity, which is instant. You can sell, and the cost of doing it are pennies, compared to other kinds of investment activity. So because they can so easily move around, they do move around, and moving around is not smarter than investing.
You have a pretty cool morning routine regarding what you have for breakfast and how prosperous you feel. What is that?
Well, that was, and I now actually send somebody over to McDonald's usually to get me something, since the publicity I got from earlier describing my habits at McDonald's. I now somebody have somebody go in the office, but that was more for entertainment value. I actually eat exactly what I like to eat. If if I liked it on my sixth birthday, at my sixth birthday party when we had hot dogs and hamburgers and Coke and ice cream with chocolate, I still like it. And I don't care about anything subsequently. That I discovered it all by the time I was six. And if somebody offered me a deal when I was 20 and said, you're going to live 1 year longer, instead of living to 88, you'll live to 89 or whatever it may be, if you eat nothing but broccoli and Brussels sprouts and onions and all these things. I just said, I'll, take the last year off. It probably won't be that good anyway. I mean, so I, uh, I eat what I like to eat. I am not venturesome in that area.
I like how you lumped in onions with broccoli and Brussels
Well,
sprouts. Never heard that.
I just don't happen to like onions, but no, I don't put them in the same category.
You and George H.W. Bush, I think. Is business school worth it?
Depends on the person, much more than it depends on the school. I mean, I wouldn't worry. Some people are going to get a lot out of advanced education, and some people are going to get uh, very little. And I don't even think it's important that every person go to college at all. I mean, we have all kinds of jobs at 70 or so thousand a year, 80,000 a year, that college training is not of use. And I actually was not keen on going to college myself. Yeah, my dad uh, kind of jollied me into it. He could get me to do anything, but uh, if they'd had an SAT test in those days, he would have taken the test for me. but because I just I was I knew I could have a good time, and I liked investing, and I didn't really feel I could read the books. Uh, so I don't, it's a big commitment to take 4 years, and the cost involved, and maybe the loans involved, and everything. I think depending on what your interests are in life, I don't think it's for everybody. I think it's for a lot of people, but there ought to be a reason you're going, and I didn't really see much reason.
All right, last question. So lightning round. So it's a few. Do you ever drink water?
Only under duress.
What is your favorite all-time song, Warren?
It's undoubtedly it's My Way.
What about movie? Favorite movie?
Well, I like The Bridge on the River Kwai because of there were a lot of lessons in that. Plus, it was enormously fascinating.
Catchy tune, also.
Pardon me?
Catchy tune, also.
Yeah,
Right.
very.
Right.
But the ending of that was sort of the story of life. He created the railroad, and did he really want the enemy to come in across it?
Well, hey, everybody. Good morning, good afternoon. That was Warren Buffett. How to live a successful life, how to be successful in business. I love listening to him. I got some great news today. And listen, I want to share it. Yeah. This is Marina Summers podcast. And listen, I want to show you some things here. Is there as well, where you can actually reach us and go about reaching out to us. So we'll be able to, give you what you need. Any other answers? We want to make sure that we're giving you what you need as far as that's concerned. So I want to make sure everybody's getting all that they need, as well as we're going to be updating you with some 2024 tax changes. So listen, I'm going to go ahead and share my screen so that we can talk about these tax changes. Yeah, there's some pretty significant tax changes that are going on here. At least I think so. I mean, I don't know anybody else, but I see them as a change in 2024, and I think it's important that you see them as a change, especially if you're in business. I'm just saying. So I'm going to share my screen here with the audio on so that we can get this going. Here we go. And I'm going to share this right here. Does anybody here see that? There we go. There we are. You're going to see a bunch of other things as well. But I want to make sure, let me make sure I can do this in a way where I'm going to stop sharing and just share what I need. I'm just hoping that you all can hear me. So I just want to make sure you guys can hear me. Okay, so there we go. All right, now let's talk. Yeah. Let's talk for a minute here. Hope everybody can hear me out there. I'm hoping you can anyway. I'm believing by faith you can. Can everybody hear me? Can everybody hear me? Hear me? I'm going to make sure, because what I'm going to do is I'm going to try to log in and make sure that everybody can hear what I'm saying right now. Okay? Because I think that's important that you hear me and what's going on. And I want to give you everything. That you hear me. Yep, I think you can hear me. Good job. All right, you can hear me now. All right, great. All right, let's get busy. Okay? Now, changes that are coming in 2024. News update. FSB in Corner, want to tell you a little bit about us. Are you lacking strategy? Increase your buying power. We specialize in financial agencies that focuses on wealth acquisitions and management, which includes services such as taxes and loans, and we dedicate to deliver the results you deserve. S Corp. I found some information on the S Corp Transparency Act that will come in effect on January 1st of 2024. The act requires any companies to report information to the U.S. government about who ultimately owns and controls them. Reporting companies that are in existence on the effective date must file their initial reports within 1 year. Reporting companies created after the effective date have 30 days after receiving the notice of their creation or registration. Changes that will affect you. I want to put that out there at first. Then I want to talk about some of the things that are going to be talking about. We're going to get more into the Transparency Act in a second here. The Internal Revenue Service has announced an annual inflation adjustment for more than 60 tax provisions for tax year 2024, including the tax rate schedules and other tax changes. Here are some of the highlights of the changes. One is the standard deduction is changing. It's raising up $1,500 for those who are married and filing jointly. Those who are single is going up to $750. Those who are head of household is going up to $1,100. Now, from the amount for the tax year 2023, now the top tax rate remains 37% for individual single taxpayer with income greater than $600,000, married $731. The other tax rates are 35% for income over $243,000, $487,000, married and couples filing joint. 32% for incomes over $191,000, married filing joint $383,000. 24% for income over $100,000, married $201,000, filing joint. 22% for the income over $47,000 and $94,000 for married filing joint. 12% for income over $11,000 and $23,000 for married filing joint. The alternative maximum tax exemption amount for tax year 2024 is $85,700. It's going to begin to phase out at $600,000, $133,300 for married couples filing joint, to whom the exemption begins to phase out at and you got to think about it, at 1.282,700,000. So 700,000. You have to look at exactly what they're saying here. So this is going to phase out, this alternative maximum tax exemption. How many of you know that might hurt? Yeah, that might hurt. That might hurt some, might help some. Another thing's going to happen is that's going to be pretty important with us. And I want to make sure that we look at, I was going to try to highlight that because I want you guys to see that. There we go. And let me get that highlighted so you'll know exactly what we're looking at here. There we go. So that's something to be looking into, and that making sure that you actually read up on what that means for you and how that's going to affect you. Okay. The tax year 2024 maximum earned income credit tax credit amount is $78.30. It's actually increased. It was $74.30. So for more information, make sure you look at Internal Revenue Procedures 2023-341 period. So 2023-341 period. Those are the policy, forms, regulations, statutes that you want to look at when you're looking at this information. I just wanted to give you a little of this information to kind of show you what's going on. Now, let's move right along. What's the difference between what, Marina, the LLC and the S Corp? I just talked about the Transparency Act. I want you to know about the difference. Both protects. When I introduced today, I talked about the Transparency Act. We also just talked about your 1040. What's changing on your 1040? Both protect owners, so they're not personally or hooked for the business liability debts. One key difference is how they're owned. The owners of the LLC are called members, and their ownership is divided into membership interests. Corporations have shareholders, and their ownership is divided into shares, which are units of stocks. Another difference is how they maintain. Corporations generally have more formal record keeping and reporting requirements, less management flexibility required of board of directors. Even though LLCs are considered easier to start and maintain, investors tend to prefer corporations. I prefer corporations too. Now let's get down to this right here. Let's talk about the Transparency Act. Here we go. FINCEN stands for Financial Crime Enforcement Network. Why are we talking about crime? Oh, you're going to see. The FINCEN, the Corporation Transparency Act, enacted in enacted in 2021, was passed and enhanced the transparency and entity structures and ownership to combat money laundering, tax fraud, and other illicit activities. When you read this act, it talks about how it was enacted in 21, it was passed to enhance the transparency. Also, operating access to the U.S. market. The law was largely ignored by accounting professionals at first. Accounting professionals at first. Accounting professionals, let me just highlight. I can see people are not getting it. Accounting professionals at first. Need to be careful here. Okay, so let's highlight this. However, the effective date of the Corporation Transparency Act is fast approaching in January 1st, 2024, and people are starting to panic. Companies are looking for more information on the Corporation Transparency Act, how it affects their corporate operations, and what the details of the reporting requirements are. This presents a unique opportunity for accounting firms and tax accounting professionals to enhance their revenue stream by diversifying their services offerings. Who does the Corporation Transparency Act affect according to the recent Small Business Administration reports? Over 27 billion small companies, small businesses are termed. Non-employee firms had no employees. That's how many had no employees. That's a very large number. Very large number. The Corporate Transparency Act is designed to improve business activity transparency through the reporting of the beneficial ownership information, BOI, beneficial ownership information. And it's particularly targeted to these small businesses who need to file reporting. Companies are identified as either domestic or foreign. Oops. Let's move on. Let's go to part 2. Domestic reporting companies are companies, LLPs, or any other entity created by the filing of a document with the Secretary of State or similar office under the law of state of any tribe. Foreign reporting companies are corporations, LLCs, or any other entity formed under the law of foreign countries that is registered to do business in any state and tribal jurisdiction by the filing of the document with the Secretary of State or any similar office. Sole proprietors that don't use a single member LLC are not considered a reporting company. Wow. Reporting companies typically include limited liability partnerships, limited liability company partnerships, business trusts, most limited liability partners, where entities are generally created by filing with the Secretary of State and similar offices. Exemption includes security issuers, domestic governmental authorities, banks, and many more that don't fall into that category. Wow. Here goes another one. Part 3. Beneficial owners. Beneficial owners can fall into one of the 2 categories defined as any individual who directly or indirectly either exercises substantial control over the reporting company, or owns or controls at least 25% of the ownership interest in reporting company. Having to categorize and design to close loopholes ensures all owners are identified. The key information is the beneficial ownership is categorized as those with ownership interests reflected through capital and profit interests in the company. The beneficial ownership must report to the federal. What was that again? Let's go back. To the Financial Crime Enforcement Network. You're going to have to report to the Financial Crime Enforcement Network. Yeah, I know. I said the same thing. So guess what they're going to want? The beneficial owner must report their name, their date of birth, their address, and unique identifier number for recognized issuing jurisdictions. So you're going to have to get that unique identifier number as well. You don't have it, you're going to need it. If an individual decides to file their information to the FinCEN directly, they may be issued a FinCEN identifier. So you can bypass the identifier, the unique identifier, by actually going straight to the FinCEN, which can be provided on the BOI report instead of required information. So you can actually get that identifier number as well. More information. Yeah. And you know why? Fraud. The bottom line is fraud. Just all fraud. Anything that has anything to do, they're trying to figure out who's fraudulent here, who's real and who's not. I mean, there were billions of companies that didn't have employees and didn't report any employees at all. Billions. Yet a lot of them got that PPP money and the SBA money. I'm just saying, I'm putting that out there. Okay. Part 4, company applicants. Company applicants can only be an individual who directly files documents that create the entity or document that first registers the entity to do business in the United States. The individual is primarily responsible for redirecting and controlling the filing and relevant documents by another. This responsibility may fall under the scope of advisory services for an accounting professional. Accounting professionals, CPAs, you are involved, and you might want to check this out. However, the report does not require information on the company applicants. This is important consideration when defining the scope of engagement for advisory services with the client. It requires the date of birth. What did it say? What did it say? Address and your full name, and either the FinCEN identifier or the unique identifier number. That's what it requires. Okay. Anybody get that? Just want to make sure everybody got that. Part 5. When do you report? Reports need to be filed for the Corporation Transparency Act. The Corporate Transparency Act comes from the effective January 1st, 2024. Reporting companies that are in existence on the effective date must file their initial report within 1 year. Reporting companies created after the effective date of 30 days after receiving the notice of their creation or registration. However, FinCEN has proposed to extend the initial filing deadline for the BOA reports for 30 days and 90 days for entities created or registered in 2024. But those who weren't, you must file. Reports must be updated within 30 days of change in beneficial ownership through the sale of business, merge, acquisitions, or death, 30 days upon becoming aware or having reason to know that the inaccurate information previously filed. Part 6. The Corporation Transparency Act impact on tax accounting professionals. It impacts on tax accounting professionals because the Corporate Transparency Act is related to an anti-laundering initiative, financial accountability. Many companies will instinctively turn to their accounting professionals for assistance. This offers an opportunity for accounting professionals to expand the scope of advisory services offered. Ensure companies records are current with the accounting firm, and that FinCEN database will require an increase in due diligence and risk assessment activities with high penalties and potential for imprisonment. This is an area that should be closely monitored. Non-compliance can result in a high penalty, possible imprisonment, to escalating fines ranging from $500 to $10,000 per violation, and jail time up to 2 years. I don't want to go to jail. I don't know about nobody else, but I'm not going to do well there. How about you guys? I'm not. So, accounting professionals, you need to get on this. Staying compliant would also require frequent monitoring for changes and updates to the Corporate Transparency Act. Keeping on top of updates like these in other local states, federal changes is made easy through accounting and tax research. I want to just stay right there for 1 minute if I go to the next slide. This is real. I had a lot of people say, I thought this was fake. No, it's real. It is really happening. And accounting professionals is also a way to make more money, to enhance your services, to become the advisory service for this. And then also to charge to go in and actually fulfill these needs for your clients. Telling them you can go in the FinCEN and do the and go in and actually put that information into that database. So there's a pro and a con. But going 2 years and going to jail, imprisonment, $500 to $10,000 fines, not going to work for me. Not going to work for me. So listen, that's an update. Again, what is this called? Let's look at this right quick. The Corporate Transparency Act. Who's in charge of this? Let's look at this right quick. The Financial Crime Enforcement Network. Why? Fraud, laundering, all and above. On another note, let's move on. Those 2553s, filings, they cause you to you're an election of a schedule, treated as an S corp, a tax purposes. Corporation, other entities eligible to be treated as a corporation, file this form and make an election under section 13262 to be an S corporation. The IRS will assume that it's SC corps if you don't take this. Now listen, What I noticed with this Transparency Act, it's a corporate transparency act, but I didn't see anything about corporations at all having to file this. I looked and I didn't see it. I saw limited liabilities. I saw that sole proprietors don't have to do it unless they're a single liability. I saw partnerships and I saw limited liabilities. And that's what I saw. That's the structures I saw that had to file this. I'm just saying, I hope everybody caught that. So filing that 2553 as an LLC and filing as an S Corp, you can file this. The IRS will assume that you're a C Corp if you don't take the steps to file the 2553. Don't forget to fill that out and don't forget to send that in. And if you're filing as an S Corp, because it'll give you the option, are you filing LLC as an S Corp tax rates or tax exemptions? So if you need more information about that, you can refer to the irs.gov, type in the search bar 2553. Also, there's some more information I want to tell you about the LLC filing the 2553. What's the benefits? Filing your LLC as an S Corp using the 2553 can provide several benefits. Tax saving S Corps are bypassed through entities, which means that the profit and losses of the business are passed through the shareholders and reported on their individual tax return. This can result in significant tax savings, as S Corp shareholders are not subject to self-employment taxes on their shares of the business profits. Limited liability protection, like LLCs, S Corps provide limited liability protection to the shareholders. This means that the personal assets of the shareholders are generally protected from the business debts and liabilities. Ease of ownership transfers. S corporations are generally easier to transfer to LLC as they have more formal structure and are required to maintain certain records and hold regular meetings. Increased credibility. Filing as an S Corp can increase the credibility of your business as it is more formal structure than an LLC. It is important to note that the filing as an S Corp also comes with certain requirements, such as restrictions on the numbers of types of shareholders, limitations on the type of stocks that can be issued. You should consult with a tax professional or an attorney to determine whether filing as an S Corp is the right choice for your business. Let's talk about these entities, your business models. Sole proprietor. A sole proprietor is just one owner who pays personal taxes on a profit earned from a business. Many sole proprietors do business under their own names, or they have a business name, an assuming name, filing with the Secretary of State. Limited liability companies, a type of business structure commonly used in the United States. LLCs can be used as a hybrid structure that combines features of both the corporate and the partnership. This means that the personal assets of the owners are generally protected from the business debt and liability if they're put under LLC. S Corps is a tax designation governed by the tax code subchapter S. Corporations, S Corp are corporations that elect to pass corporate income losses, deductions, and credit through their shareholders for federal tax purposes. Shareholders of F Corporation report the flow through of income losses on their personal tax returns and are assessed tax at their individual income tax rates. Yes. That's why I love them so much. This allows S Corporation to avoid double taxation on the corporate income. To qualify for S Corp status, a corporation must meet certain requirements and submit a Form 2553. The corporation must be a domestic corporation, having only allowable shareholders, may not be partnership. Corporations are non-resident alien shareholders, have no more than 100 shareholders, have only one class of stock, and not be ineligible corporations. Just saying. So I'm putting that out there. Keep in mind that LLCs are considered members when S Corp are considered stockholders. They're shareholders, but they hold a class of the stock, right? Well, listen, I don't want to be before you too long today, but listen, I wanted to make sure that you had the update, news flash, and you knew exactly what was going on. Don't be in the dark, because when you stay in the dark, you get left. I'll give you a scenario. You need glasses, but you feel you don't because they don't make you look sexy or compelling, or you think not smart, but you're walking in the dark and you need glasses. Which one will you choose? Will you continue to walk in the dark, or will you go get the pair of glasses so you can see clearly? That's a question of the day. Let's see if you can answer it. Well, listen, this is Marina. So good to be playing with you guys today. I'm telling you, I'm excited But I gotta go. I gotta go. It's my husband's birthday this weekend. Yeah, he's a 31st baby. But I will see you guys soon. And listen, know that money, 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 money. Some people really do gotta have it, but some people don't, right? So I want to make sure that you guys understand what money really is and what it means to have this type of wealth and this type of businesses in a place where what you got to understand. And all you're getting, please get an understanding, because it is very important that you understand.
The Bluetooth device is
So, hey,
ready
listen.
to pair.
I appreciate every last one of you. Thank you all for being here. Thank you all for being a part of Marina Summers Podcast. We appreciate you and thank you. Hey, see you soon next Saturday, baby. We'll be here with more information on updates. This is a news broadcast. This is a new broadcast. See you soon. Bye-bye.